afterwards. And welcome to our bi-weekly KW Commercial SoCal session. Always good to be here and give a platform to our commercial people here in the LA area. And very excited to have today Jared Hussmann, right?
Mm-hmm.
Jared runs about a year or so the multifamily division with the KW Commercial International. Jared, kind of in short, you're gonna tell us more about yourself, Jared, but you are a third generation entrepreneur, which is very impressive. Co-owner of the investment firm Hussmann Holding, and you guys mostly operate in central Iowa region.
Yeah. So I'll do it as quick as possible. You guys aren't on this to hear about me. You're here to what's in it for yourself. So I'll make it as quick as possible. Third generation real estate guy. My grandpa was a home builder. So I started learning the trades from my grandpa, who would have me work for, I think it was like a quarter an hour. And I mean like a quarter, like 25 cents an hour, doing all the little stuff around the construction site. Dad was my electrical contractor, and both of them were in the real estate fields and contracting construction, but they both were in the development phase, and they both owned investment property. And my dad eventually moved from, my grandpa always owned stuff, and developed apartments and houses. My dad eventually moved from electrical contracting to development. And then I was really lucky to just be around this my whole life. And then I was also the lucky kid where dad pulled me out of school, called me in sick, taking me on business meetings. So I started like meeting bankers and talking cap rates at 13 years old, not knowing what the heck a cap rate is, but I was 13 years old with my dad, day off school. So I called it a win. So I've been around this business, long enough, a long time, got in this business myself. Started small, flipping houses, investing, building my own portfolio. So I've seen the ownership side of things. I've seen construction side of things, development side of things. Long story made really short, built that up, burned out. If anybody's ever managed apartments for yourself and flips, you realize it's not as glamorous as HGTV likes to describe it. And tenants are still full of tenants, toilets, trash, and every other T you can think of. And I'm not sure what else other T's there are, but I'm sure there's plenty of them. So I decided that wasn't for me. At that point, I had the opportunity to invest in a redevelopment opportunity, and start growing my assets in the commercial world. So did that. At that point, I was 24 years old or something. I don't know, something like that. I think it was like 24. At that point, I decided to become an agent. So I've been an agent now for, it's coming up on 7-8 years. And I wanted to help owners that had been in the multifamily world, because that's the area I had a lot of experience in. So I had a lot of similar frustrations, pain points. I understood my avatar, which is a whole other conversation here. But being able to understand your client and empathize with them, I think is a really important factor in this business, whether that be dealing with tenants, landlords, your clients buying and selling properties, being able to understand their pain points and then solve them and ultimately give them a good service is what makes you successful as an agent. So that's really about me enough. I know I was asked to talk a little bit about what's happening on the commercial side of things. Is that right? I'll make sure that's what.
Feel free to share, about that. And of course, you just, said something that is very interesting about dealing with client, know what they want. So talk to us like you would talk to other, co-mates, right? In the industry, other commercial multifamily people, if you had to coach someone or share some insight or what have you. So either, have both hats, if you may. We'll be very curious to learn from you.
Sure. So I'm gonna stand side over here. And then for a few minutes here, and then we'll tie into these other things. So if I had to give advice to new agents is, as always, you're going to hear this a lot. I mean, pretty common theme is begin to specialize, begin to know your niche. I think I did a study one time where someone showed me this in a CCIM course. There's like 97 different things you can do inside commercial real estate, between finance, between brokerage, between management, office, retail, multifamily. I mean, we're not even trying here, guys. There's so many paths towards money that the idea you're going to actually master all these is totally erroneous unless you're in just a small market. And by a small market, really, you've got to have about 100,000 people to be a small market or less. If you're above 100,000 people in your market in a geographical range, you can begin to specialize. And the more you specialize, the more money you're going to make, especially as an hourly per rate basis. That's a whole nother conversation point. But really get to know your clients. The other piece of advice I would give anybody that's either in the business or just starting, and this is important for multifamily owners as well. I talk to a lot of agents who want to do multifamily as a way to cherry pick deals. I will say very confidently, if you are becoming a multifamily broker, specifically as a specialty, as a way to do more deals, you're going to be really, really broke. Because every one of your clients is going to call you and say, you're just going to cherry pick deals. Why would I work with you? They don't want you to cherry pick deals. They want you to know that you're going to treat them as a fiduciary agent. So be a fiduciary agent to your clients. Now, with that being said, and this depends on how your office works, how your splits work. If you guys want to throw your commission on these deals and syndicate with them or partner with them, totally different ball game, and definitely consider doing that as a way to grow your wealth. But be very transparent, open. This is a theme of our team, trust through transparency. Be very transparent on what you're there for. Some of my first mentors gave me the advice always as an agent is basically don't bite the hand that feeds. So if you're going to specialize in one area, don't literally compete with your clients. Because it's a really good way for your clients not to trust you. And if you don't have trust, then you don't have fiduciary responsibility, then you're just a transactional agent and you're never going to make a lot of money. So that's just advice I would give anybody that's starting off in this business, is just understand where you want to play. And again, if you want to own multifamily, either do it through syndications or go make money doing other things. Gary Keller talks a lot about the opportunity of growing your own team, your own business inside of real estate as an agent. Grow your business, invest in a lot of real estate, invest in apartments or multifamily, or as I do, other asset classes. I invest in industrial and retail. FYI, that's also one reason I specialize in multifamily. One, I know the avatar really well. Two, I have no desire to own multifamily. I've done that and I have no desire to do it ever again. Unless it's like an urban class apartment downtown LA I can get for a 10 cap, and that's on actuals with 80% vacancy. So a massive upside, then I might buy it. Call me if you have that. So that's the advice there. So going back to things a little bit here, guys, things we're doing for KW Commercial. Obviously, if you don't know, Andy Samudio is doing the KW Commercial launch. So she is traveling, helping launch divisions across all of the country to help grow our brand. We do have, you don't already know, Summit already being held in Austin, 16th, 17th, 18th there. I believe it's at KWRI. We are out of seats. I believe we're all sold out. It's 200 in person. It is sold out. There is virtual tickets available, so you can do virtual. They are working on trying to maybe have some different version where you could actually attend and do a virtual session, but still be there live. So you can see some of the networking events we're going to have on Wednesday, Thursday, and Friday night, and also in the mornings. So make sure you sign up for that. All the product division leaders are running monthly masterminds around this. Our masterminds are always geared towards a subject, and then we always highlight an agent in our business, and then we talk about the mastermind and how we can make more money. Multifamily is always the fourth Wednesday at 1 p.m. Central Time. It'd be 11 a.m. Pacific Standard. And we do that fourth Wednesday. This month, we're going to bring on a national lender and talk about lending practices right now, which I will say, guys, this ties back to multifamily really well. If you guys are not yet getting creative in your financing on multifamily, which I'm assuming you probably are, you have to be right now big time. I was talking to some lenders just a week and a half ago, and for multifamily deals that were stabilized, they had life insurance companies doing 40-year amortizations. Sometimes the entire 40 years amortized out with no balloon payment. We're also talking about Freddie Mac deals doing 30-year amortizations at 10% interest only, or sorry, 10 years balloon payment, Freddie Mac, with 10 years interest only the entire time. So a 10-year IO on a multifamily deal can make or break a deal. So get really good at your financing, because that financing has been really crucial right now. And we're seeing some real aggressive lending, especially from the CMBS and the capital markets in terms of, again, CMBS, life insurance, Freddie Mac. If you're still working a lot with banks and credit unions, they've gotten really skittish on that. Tough to get that done unless you're one of the big 4 or 5, maybe, and doing a larger project. But anything in that 5 to 10 million range, where you're starting to play into that capital markets arena, definitely make sure you are underwriting it very effectively, especially these DSR rates being way out of whack, 1.2, 1.25s. At least here, I'm not sure what LA is there, Southern California. Which does tie another point as well. If there's any deals you guys are either looking to represent buyers on, or you're looking to bring to market as a listing, I would highly recommend you run your underwriting package past a mortgage broker or some kind of lender prior to going to market. Because some buyer is going to call you on that financing package and ask if you can really get it done or not. I'm listing a property right now, and we actually have a package out to a mortgage broker, the same one I just mentioned, on what the financing is going to look like on the deal, because I want to have that prepped. So whenever any buyer comes and says, this is my underwriting assumptions, we know we can hit it. But that'll be our subject matter coming into end of this month for multifamily. I believe the office is on Monday. At the same time, if you want to attend the office one, Monday, the 4th Monday. Industrial should be on Tuesday, and then hospitality and multifamily would be on Wednesday. I believe retail is on Thursdays. For November, we are not going to have a mastermind because we're going to be at Summit. So we're going to have a lot of things going on that last week. It's also time to be with your families. It's Thanksgiving time holiday. Get on your calendars now if you want. We are going to do a combined session, and bear with me, I'm trying to look at my dates on this. I believe right now, tentatively, we're planning on December 13th doing a national call about business planning for 2023 and figuring out how to business plan, basically MREA your business plan, but specifically for commercial agents in a way that we haven't done as well. So be ready for that. The other thing we are rolling out for anybody that is newer to business, we have seen, I don't know if you guys have seen that too, from the product division leader standpoint, we've seen a gap come out between agents who are already successful doing business and leaving Nucleus. You leave Nucleus, it's water hose to fire hydrant, a lot of information coming at you, but then it's kind of a, what do I do next? And how do I get the experience? So we are launching boot camps, actually, 6-week boot camps will be launched here first of the year for you to specialize. So I actually have a multifamily boot camp. It'll be 6 weeks, and it'll be all geared towards just multifamily, talking about low income housing, USDA, HAP, talking about urban versus suburban, amenity packages, how to underwrite concessions, how to look at taxes going up, how to look at market rate, how to anticipate market rate, how to analyze supply and demand. It's going to go all into just high level, also detailed nitty gritty of just multifamily. We're going to go into due diligence phase. How can you actually do your due diligence? What to look for? Different tax saving strategies, cost segregation, DSTs, 1031s, TICs, different forms you can utilize to buy these multifamily assets, and then exit strategies, value syndication as well. So we are going to launch these boot camps. It is coming out again first of the year. And for anybody that just is finishing Nucleus or is wanting to get a little bit more granular on a specific area, industrial, retail, hospitality, multifamily, or office, then you'll be able to join that product division leaders call and join that. They are going to be paid for. This is going to be an extra cost. It's not provided through KW Commercial. Nucleus is free to our members. This is going to be a cost that'll be falling on yourself or on your leadership, should your leadership and you guys want to figure out how that works, but there will be a cost to that. That is a lot of what's going on the commercial level. As we roll through everything, we are still making the transition to RealNext, continue to work on RealNext and transition over to that as well. That's actually really important, guys, by the way, the RealNext transition. I know we might all hate that at times, but RealNext is really important for us getting our numbers figured out, because when we actually look at our numbers, we think KW Commercial is in the top 5 for brokers across the country, the number of deals we're doing, but we can't quantify those numbers because of how we're a franchise system. And so because every office does things differently, we can't confirm we are top 5. And so we can't market that because it's a liability. But once we get everybody into RealNext and we're all sharing information, sharing data, now we can begin to market and show that, hey, we are a top 5 company. We actually have a huge business here of all our agents. So really important, keep working on RealNext, keep transitioning to that, because that is going to be how we can quantify and figure out our numbers to actually get the right things. Josh, your question is RealNext coming. What do you mean by that?
I already use RealNext. I've been using
okay.
it for years. So does that mean that since I'm at KW that, I have access to that platform as a
You should already. Yeah, you should. You should. It should be for free.
Okay, good. That's great to know. I'd asked our team leader and they weren't sure. So good.
Yeah, that should be free. If you need help with that, email me. I'll drop my email in the chat here or whatever it is. But yeah, that should be totally free to you.
And look at just as a side note, look at the chat. I dropped as Jared is talking, I'm dropping a lot of those links to the commercial event, which is going to be virtual. It seems like it, and then the commercial training. They just switched to new calendars. The second link is actually the correct one with the links and etc., which is very useful. And the last one is the both application and the link to the. By the way, Jared, that's our hosting website for the commercial SoCal group. Mm-hmm. Just to be like more local, but yeah, guys, everything is there. So linking to the mothership. Go ahead, Jared.
And this is actually kind of just a general theme, by the way, guys. Right now, what's been a common theme, I'm just gonna be very honest with everybody here. We're all family, we're all part of the K family. We've had a lot of people just kind of all doing their own thing for years. And what's really been a common theme in the last year and a half is let's get together. It's a team. Let's all achieve more as a team. I know it's cliche, but it's true. So the more we can do things like this, the more we can all work together, the more we're going to realize we can do more deals too, as well. Not just, oh yeah, we're top 5, but one thing we are working on, and I don't have the answer to this yet, happy to take questions or feedback, but we are trying to figure out how to get, as people start to specialize and earn these, we're actually put probably these designations, then you actually know, hey, I've got a deal, let's just say multifamily in Nebraska or in Nevada or in Texas. Who do I call for that? Look at the roster, figure out who actually is one of the top specialists of multifamily. And now we can get referrals across state lines among specialists rather than just calling who we think might be the best. So as we all work more together, we can actually all create more synergies, especially for our clients, guys. Commercial, clients, I mean, come on, none of them work in one state. All of them have, national ties. This isn't like residential where we just get one agent or one person who wants to buy a house here. So as we all work more together, we can also make a lot more together.
Hey, Jared, has there been any efforts to put together some sort of KW Commercial, like LexisNexis type of research tool that we would have available to us?
I don't know the answer to that. I think there's still a common theme amongst Realogy that's used quite a bit, or CoStar. I don't know about LexisNexis, but I will make a note to ask my leaders as well about where we're at. I know Cynthia is always working behind the scenes tirelessly to add in more stuff for all of us, and I know they're announcing some stuff in Summit, but I will ask on that one. I'm actually gonna make a note.
Yeah, it doesn't have to be LexisNexis. It could be, just any sort of relatively strong, research tool that would be, I know if I would find it helpful, others would as well.
100%. And one thing I don't know what you guys use. I do use Locate Plus. I was put in the chat. That's what I use. It's my own service that I pay for. It's $70 a month. Seems to be pretty accurate. And I can do searches nationwide for that one. So that's what I use. I like LexisNexis as well. I've heard it before, never used it. But I definitely understand the need for research. And I believe KW also has their app as well, the residential app as well, that can do some background searching. I've never used it though, so I can't confirm if it works well.
Do you know if this Locate Plus have like a brokerage level package, or is it just only per user?
For Locate Plus, you mean?
Yeah.
Per user. That's per user. I never talked to them about a package deal. Which is why I admit, if you're going to look for a package deal, I'd probably talk to LexisNexis.
Yeah.
Or I would have someone in your office maybe train you on the residential method. They have some background search as well to keep everything safe. I've heard it's very good. I have not used it, but I heard it's free as well. So again, always go as far as you can with the free before you start paying for anything, right?
Yeah.
What are other questions about commercial on the national level, what we're working on, and what's going on?
Yeah, and just to highlight, I know that some agents joined us just a few minutes ago. So if you missed the opening, Jared Hussmann, he's a multifamily, specialized in multifamily out of Iowa, and he runs the multifamily division for KW Commercial headquarters. And we do have some heavy hitters in the call in the multifamily. So great time just to ask questions or connect, right? Some of you guys doing business on a national level, right? Like Josh, Michael Couchet, David Yashar, trying to see who else is here. I don't see few of the names. So feel free to ask questions and
for anybody else, by the way, too. I don't know what something everybody else does here. Some things I will say, just some tips and tricks that have worked well, whether it's for the experts or whether it's for the newbies. One, if you can't tell, my back behind me is all my stats. So I have all my stats on a whiteboard next to me when I'm making my calls, because it sounds a lot more impressive when I'm saying the average price per unit is $138,321.68 than just saying I think it's around 130,000. So if you are doing any kind of selling, use this. For Josh or anybody else out there, by the way, that's more that maybe got some credibility in the market, or anybody that's doing some big deals. I've used this before, by the way, and this works really, really well. Feel free to steal it from me. We all get calls all the time from buyers, and buyers are saying, hey, I want to buy 100 plus value add unit, et cetera, et cetera. They give you the whole spiel. For agents, we need to really quickly learn how to disseminate between who is telling the truth and who's lying. So one thing we've done at the Catalyst team here is actually create a buyer's program for us, and it's 4 stages for the buyer's program. And I tell everybody this right up front. Say, hey, look, guys, if you want to be a buyer for the Catalyst team, completely appreciate that. Understand, especially in the multifamily world, everybody wants to buy right now, and everybody wants to buy a deal. I appreciate that. I hope you do too. The 4 stages of our buyer's program. 1, bottom stage, you're going to join our list. Joining our list means you get access to all of our marketing, our listings, our quarter reports, whatever we send out, and you're going to be informed of the market. That's just joining our list. And that's usually for the people that just want to get a feel for what's going on in the Iowa real estate market for multifamily. Second tier, non-exclusive phase. This is where we actually get something signed from our buyers to say you are non-exclusive to us. However, if we put a deal in front of you via email or text or any of that sort, you agree that you'll work with us at the Catalyst team and a commission will be paid. This is what I always like to call the dating before marrying phase. So we actually date a little bit, and we actually see if you're actually credible and actually going to do deals with us too. But all you're agreeing to do is you pay us that. You can work with other agents. You can see if you like us or we like you. And then it's just going to be a 3-month commitment to be non-exclusive to see who likes each other. Keep it 3 months, keep it short. Don't spend a lot of time. Our third phase, one of our second tier on the way up, is our exclusive phase. Look, we've got a lot of buyers, we're experienced. If you really want our time, you have to sign exclusive with us. Exclusive is going to be 6 months. We're going to get paid commission on any deal you transact on. We also agree that we're going to track the market every day. And anytime we find a property listed, we're going to send it to you that same day in an email. And we're also going to send you a weekly email of any properties we found off market. That's exclusive phase. In exclusive phase, you do have to show us your bank statement, where the money's coming from, the 1031, your LLC, your credibility, your partnership agreement, whatever it may be, to prove you're actually credible. Our top phase is what we call our retainer phase. On the retainer phase for our buyers, what it really means is one of two things. One, you're actually paying us a retainer every month, so $3,000 to even be in the retainer phase, or you have transacted a deal with us in the last 12 months. This is our top tier client phase. I've actually done deals with us and shown a capacity to close deals. And the only way to get into that top tier phase, and these guys see the deals. I mean, I get a call, I'm on the driveway, they get the call first. The only way to get to that phase is to do deals with us or actually pay us to be on it. So we've created this 4-tier buyer stage program, and we've had a lot of success with it because it's actually let buyers know where they stand. And what it's actually done is it's let a lot of our buyers be able to basically tell themselves where they want to fall on our list. I will say it usually takes a little bit of credibility to get to that level to work with buyers, to be able to tell them no. But we've had a lot of success with it in our market. In fact, I have an email from someone right now saying they want to join our non-exclusive list from a meeting this morning, and join that. But that's something we do. For anybody out there, feel free to steal it. Buyers actually, for the most part, I found appreciate it a lot because I'm just being upfront with them. Hey, look, guys, this is where things fall. I've got current clients. I've got to serve them first. I'm sure you understand. Beyond that, I got other clients who are kind of exclusive with me, and they've essentially, I always say date, engage, marry. The married ones are the current clients. The engaged ones are exclusive, and the dating is non-exclusive. You know what? I've got to make a commitment to the ones that have given me past business and the ones that actually are agreeing to give me business. And once you say it to buyers, most of the time they're going to realize really quickly that it's the serious agent. I either need to just join their list, call someone else, or maybe start signing a non-exclusive or exclusive with them to get into their actual call list. If you go to any of these trainings, they always talk about how you want to get on agent's top 5. And I tell people too, if you want to get on my top 5, you got to do a deal. Period. End of story. Or sign exclusive. Sign exclusive and then do a deal with me, or do a deal. There's no other way to get my top 5. I'm not calling you. Hopefully it's helpful. I don't know if it does or not. But I found it to work really well. Some people might not like it. Some people, may piss them off, but for the most part, a lot of success with that.
Well, it's definitely very creative, so and thanks for sharing. Some people might use it locally, some might not, but it's everything we can learn.
So
right?
Here's the thing, guys, and this ties back to your point, and yeah, use it or don't use it. I mean, at the end of the day, it won't really mean a lot to me. It's just what I've had success with doing. At the end of the day, our job as agents, whether we're experienced or whether we're brand new, either way, our job is to set expectations, right? That's our job, is expectations. So the more you can set expectations of your buyers, especially buyers who can be sometimes unqualified in the beginning, the more time and energy you're going to save yourself. And again, we've just put official parameters around what we have. You don't have to do this here as well, but having the conversation with buyers up front is really important.
I love that. Jared, question, how, what different topic, how's the multifamily market in Iowa right now?
Overall, we're really good. I mean, like everybody, we're seeing a slowdown here. I mean, we're seeing, this sounds, again, you guys might laugh at us here, but we're seeing about 45 million of sales volume in last quarter, 44.71, to be super exact, but who really tracks that stuff? And that's spread over, I gotta say off the top of my head, it was like 15 transactions, 12 individual, because some of them were cut portfolios, which that sounds, again, maybe laughable in LA or California here. But to give comparison, I mean, we're down about 20%, 30% in our sales. Pricing's fallen off about 10, 15%. At the end of the day, these interest rates are slowing everybody down. It is what it is. The market's doing its job on slowing it down. Where we've been really fortunate here in Iowa is that we just have a really robust statewide economy. Like, I don't want to brag to you Californians, but we actually had a state surplus for our budget. So we actually gave money back to people because we didn't know what to do with it. We just had extra money in our Iowa budget. So we were just like, hey, we don't know what to do with this extra money. We actually have a budget. Cool. I also was just able to hear Casey Conaway. If anybody's heard Casey Conaway, by the way, phenomenal. He's a CCIM economist, Red Shoe economist, I think is what his name of his company is. He's wonderful. And he was just talking at an event I was at last week, 2 weeks ago. 2 weeks ago, he was at an event I was talking at and he was pretty bearish on the whole national economy going forward, being very honest. He just said, look, at the end of the day, the Federal Reserve is trying to solve a supply chain problem by hampering demand by raising rates so fast. And he goes, they're trying to solve, again, just basic math, supply issue. They're trying to solve it through screwing up demand. He goes, it's totally backwards. His words, not mine. And he goes, we're seeing the repercussions of this. He goes, expect all your gas and oil prices to jump up drastically come November 2nd, because our oil reserves end November 1st, just in time for elections. So he's like, expect gas prices to jump up November, December, expect heating costs to jump up November, December, expect all that stuff, which, by the way, I've been using that as a point to give to my multifamily owners. If anybody's paying for their own heat, at wherever you're based out of it, we actually have cold times in Iowa. You might not have heat there in California. We still use heat once in a while, but been a talking point. But he did say that the economy is not looking good. He's expects some bad times, especially going into the winter, coming out of the winter into the spring. He did say overall, the one shining light is just for us. I'm just going to be a little bit selfish here because I'm on camera. Why not? North Dakota, South Dakota, and Iowa were the only 3 states actually seeing the largest growth of wages. We're seeing 8% plus in wage growth. So his exact words were, if anybody can handle this inflation we're seeing, it's Iowa, South Dakota, North Dakota. I don't know why the Dakotas, there's nothing up there except a lot of ground. I don't know why we would go to Dakotas, but then you could say the same about Iowa too. But either way, you would think there's a lot of wage growth going down to the South and everywhere else. It's really not. People aren't getting, raises faster. So Iowa's doing really, really well. We're pretty well insulated for the overall economy. A common theme, I will say, I've been saying this to my buyers as well. I'm going to say it to you guys as well. And this is me just relaying what case economist. What we have been seeing happen a lot is a lot of onshoring back from COVID. So COVID realized really quickly, we have a logistical problem, logistical nightmare. We can't offshore everything and hope we can get it here just in time. So we're bringing a lot of manufacturing back to the Americas. Prior to COVID was the US FTA agreement signed, which created a lot of trade between Canada, US, and Mexico. The reason that's important is because it was done, ironically, at a great time right when COVID hit, because it's bringing a lot of manufacturing back, especially to Monterrey, Mexico, which is just to the south there past the border as well. So we're seeing a lot of manufacturing come back to the Americas, not US, Canada, Mexico. And so what we're seeing then is what's been really crucial for the travel of goods is anything that's north-south, that's running north-south. So if you ever have people looking at investments across the country, anything that's running north-south in terms of railway, interstate, or water is going to be really, really important. So like the Port of LA, Port of LA to San Francisco, they can run along the water, very important. For us in Iowa, we have the Mississippi River. We can run right down the center of the country, river it. Kansas City, middle of the country, been blowing up, industrial, rail system, airport, Amazon's putting a ton of money there. You can get goods all over the country. Anything that's running north-south is gonna be pretty much a gold mine for people going forward, especially if you're in the manufacturing or industrial world. But again, manufacturing and industrial tends to create jobs as well. So that's why we're seeing a lot of growth in those areas. Dallas, Austin, Monterey, all those areas, San Antonio, all those actually run right down along the coast. We're also seeing Mobile, Alabama, Mobile, I think was Destin, that area there, putting in a whole new port to receive goods from the Gulf of Mexico to ship it all up to Canada, to go right up through on the rail system there. So if you have any clients looking in that panhandle of Florida into that Alabama area, huge opportunity for growth in that area. Again, in the north-south through the Kansas City market, obviously Dallas, Austin continue to drive a lot of traffic as well and investment. But even for yourself, when you're talking to your clients, make sure to also pull back the picture and explain to them on a big picture why their investments might make money, for better or for worse. So it's just kind of advice what I've been hearing. I've been sharing my people. I don't know how it relates necessarily to Southern California, but I'm sure it relates very heavily in terms of your manufacturing and goods down to Mexico as well. Make sure you're always relating why these deals are going to be good and why you're going to continue to grow on a national level. I just threw a lot at you guys.
Awesome stuff, Jared. Really, kind of like a really good overview of what to expect. And I think Michael was already pitching. Michael, are you pitching or are you asking?
I'm asking.
You asking? Oh.
I honest to God, guys, and to your point, Michael, I'm a big believer in going small to go big. So if it's in Iowa, I have stuff, I know about it, I'm working on it, or I can get it done. Outside of Iowa, I really haven't heard of much in Kansas City, Oklahoma, Kentucky, Tennessee there. It's just not areas I play in very well. I'm a big believer in you start small and then you start growing that pie there. So call me again in 3 or 4 years, Michael, I might have something in those cities. But for right now, my focus is heavily on just Iowa. And that's, again, my opinion, how you stand out in a crowded market is you do one of two things. Either you go small or you go incredibly wide. The hard part of going incredibly wide right now is if I go incredibly wide, I have to compete with attention from Kim Kardashian and whoever else is in the world.
If you have any 250 unit pluses in your backyard, 2010 or newer, just keep my number, because I got those guys for 250 units and up. 2010, we'll even do 2005. If it's a good story and as long as it's off market.
What kind of capitalization rate?
Shoot us a story. I've seen my guys pick up 1 caps before.
Okay.
You always got those deals, that they won't give you the listing on, but you have the information, you have contact lines to the ownership. That's what we're after really, is the information and the people that can get us through the door. And, we'll buy in Iowa. We have no problem with that. As long as it's, a good vintage and, good scalability out the gate, we'll even pick up a portfolio if you got, but everything has to be 150 units, 200 units plus.
Sure. Yeah, for that, the size you're talking about here, you want to probably be in that 200 unit plus range. For our market, that's going to be about 30-35 million.
No problem. Bring it on.
Yeah, no, I'm not saying you can't bring it on. I'm just saying, my wheels are turning on what I know about, hear about, or thinking about. So
I'll put my email inside the chat right now, and if you come across anything,
Yep.
Awesome. Thanks, Mike. Other question to Jared. Wealth of information, Jared. That's awesome session so far. Thank you.
Yeah, what questions do you guys have? What are things I can help talk about? Any questions?
I do have one more. I want to know, are you seeing your buyers using more regional banks, or are you seeing them using more Fannie? Like, I'm sure everybody can get a Fannie and Freddie loan, but I'm curious to know if you see them using regional banks, and if they're giving more competitive kind of rates, and who are those banks?
Actually, exact opposite, actually, more the small banks, the local ones, because the regionals and the nationals are having to still say they gotta make money and they're focused more on the bigger stuff. Where I've actually seen the most aggressiveness, once you get past the Freddie Macs, the CMBSs, and the Lifes, is actually the hyper local banks. And I don't mean like just like the local ones that are like, oh, we're working across the state. I mean the ones that are like, no, we literally only work like this 30-mile radius kind of thing. Because those are the ones that are saying, I know that apartment complex, I watched that get built, or I financed that, or I know that, or my clients live in that building, whatever it may be. My clients, I mean, they're employees or they're people that go to the bank. So I've actually seen a lot more of the hyper local, I mean, the smaller banks getting aggressive, because they understand that that's their property type that they can actually own when all the big guys are getting scared running away. So I've actually seen more of the hyper locals be successful. I can think of, let me think here, my last 3 or 4 deals, we haven't even went to a regional. They've all been hyper local relationships I have. One's a credit union, and then 2 are local banks. And by local, I mean they only are in the Des Moines market, not even further outside Des Moines even. And they've been the most aggressive.
Very cool. Thank you.
Yeah.
Thanks, Mike. Jared, if don't have anything else to share with us, honestly, that was one of the best sessions we had.
A couple other ideas, by the way, for you guys as well. I've been thinking about here. If you guys want other ideas here, you guys get some insight into my mind here a little bit here, but break down for a moment still too, guys. This is back to even your question there, Mike, or is it Michael or Michael? But break down again too. Why do people hire you? Okay, why do they hire us? They hire us to get a deal done, they think, right? Or to get deals done. Well, wait a minute. But you're actually asking me for who my manager is, or who my attorney is, who my banker is, or who this all is. So people are hiring us not just for us, but for our relationships. So if you're looking to increase your business right now, go find those vendors and talk to them about doing collaborations. Talk to them about doing a mailing to all your sellers or all your buyers. And on one side, have your lender on rates they can offer, and the other side having your information. Hey, here's my lender, they can offer these kind of rates. Here's the property we just did. Find ways to add value to your clients and let them know that you actually have value to add through your connections. Beyond that, I mean, hey, people all need managers right now. Right now, people need good managers because, inflation's going up, costs are going up. Hey, I've got a partnership with this management company. If you go to them, they'll offer you half month free, of management costs. I don't know. I'm making up things on the spot. But that's a way you're going to add value for your clients, and you're going to stand out a lot more than just saying, do you want to buy and sell a property?
Yeah. Very creative, Jared. That's awesome.
We have to be creative right now, guys. When things are tough, again, we have to start thinking about what are the real reasons people hire us. They hire us for all these things. They don't know it, but we do hiring us. And it's not just to underwrite a deal. It's to your point earlier, Michael, the reason people hire me is because I can call up 3 managers and 3 bankers, and all 3 will take my call any given day of the week, and all of them will manage or underwrite any deal I send them and the client. So, and literally, like, it's almost a layup. I mean, I make one of the clients I just did a deal with literally hasn't seen the property, did no inspections herself, no management herself, no financing herself, literally took all the people I referred her to and did a whole deal with nothing. So it's in our job to let our clients know these things, that we don't just find deals, we put you in touch with our top people who are going to actually take care of you and your investments.
Jared, can I ask you a question?
Yeah.
What do you think about seller financing in this market?
I just pitched a deal on that a couple hours ago. Put an off market offering on. Buyer offered 20% down. Asked the seller to carry back 80% on a 25-year note at 5% interest rate. So I'm bullish on it. Very positive on it. It's a great method for sellers who have a lot of equity in their property, who have very little debt on it, who want to make money on the spread, maybe the spread between what their debt is now and their arbitrage. So very bullish on it. The key is this, I will say this here, is that if you are going to do seller financing, my only recommendation is this: really do two things. One, make sure your commission's figured into that agreement and you can get paid out of it, because that's another thing. Two, because it's not technically a sale. Two, make sure you know your buyer really well, because I never had it happen to me, thank God, fingers crossed, knock on wood. But if you bring a buyer to a seller and you convince the seller to do owner financing, and then your buyer reneges, or worse, reneges and trashes the property because they did a bad job managing it, then you're going to be in real trouble with that seller, especially if you got paid a full commission on the sale. So I do pitch seller financing a lot. I only do it for essentially my my top clients that have done deals with me before in the past, because I'm very careful. If I'm going to do something, put my name on who that buyer is. I'm going to stretch my neck out as well. So super bullish on it. I love it. I think it's a great resource right now. Me personally, I only put my name on it if it's a current or past client of mine. I don't do it for anybody else, because I don't want to put my neck on the line and potentially ruin a relationship with a seller down the road, if this isn't a credible buyer. That's just my 2 cents. But at the end of the day, I mean, there's somebody said if that you help the seller sell it, get paid commission, buyer reneges, you sell it again, get paid another commission, all gravy. So that's your own business model as well, if you'd like. But that's my opinion on it. Is that helpful?
Very much so. Thank you. That's a very good point, Jared. Thank you. Yes.
Here's another point I want to make as well, guys. I want to touch one point. Understand, when you're doing seller financing, not all of it has to be seller financed. So I'll give you an example. My guy might say, hey, you know what? I'm coming to the deal with 60% from Freddie Mac. Not with Freddie Mac because they hate that, but let's just say a bank or something. My bank's only going to give me 60% because they hate the DSR at 1.2 where the rates are at 2. I still have 25% down. I need the seller to bridge me 15% on a second. Will you bridge 15%? So realize seller carry cannot just be them being the first. Some sellers might say, I'm willing to take a second and be a second on this property. And in some cases, I actually prefer that more, because how I pitch that to my sellers is, hey, look, you're going to get 85% of your money day one off the top. Your second position, let's say this buyer does screw you over, just being very blunt about it. Let's say the seller does screw you over and you're in second position at 15%. You can then foreclose on them and get this property back at 60% of what you sold it for. You've already owned the property, you already managed it. So what's the worst case to happen? Because you're literally going to get 85% of your money up front. 15% is out of your profit. So you might get it back at 85%. But either way, you're going to buy this deal back at 85 cents at worst of what you just sold it for. At the worst.
And the exchanges?
Exchanges are interesting. That's a whole other point. But exchanges, that's kind of one of the ways you can make it work. You can exchange on that as well.
Even if you're doing a seller financing, 15%?
Sellers can finance an exchange. Yeah.
Okay.
So example, and you can do it a lot of ways. You could even tick it. You could do a tick on that as well. But yeah, you could figure that out. What I would probably do is do a tick. On that.
You can seller finance and exchange at the same time.
Mm-hmm. That was actually on our last on our last multifamily call for the national. The 1031 John was talking about that. You can actually go to the calendar. Yeah, thank you, Meny, and review that. But he talks about how you can seller finance into a 1031.
Okay.
there's rules around it, all the other things and stuff. When he talked about that, but yeah.
Thank you.
Who's leading the weekly calls usually on Wednesdays? Are you guys gonna do some rotation or?
Oh no, I mean, it's just me. I mean, I do the multifamily one. So you always see my shiny mug face on the multifamily stuff.
No, it's awesome. I mean,
you'll see all the rest for everyone else.
Yeah, and again, I guys, I put on the chat a few times the link, so just figure out how to incorporate that in your daily, weekly schedule. Just to get in that shape, right? You have to stay in shape.
Yeah, we always try to make it relevant to what we're seeing in the national level, and then we're always trying to bring on again agents as well to talk about what they're seeing for deal flow, what we're talking about. Same as that we talked about today. What are rates doing? What are cap rates doing? What are we seeing? What's the last deal we've done? We're always trying to make it relevant.
Well, Jared Hussmann, KW Commercial Director of Multifamily. Can't thank you enough, Jared. That was an awesome session. Thank you for the insight and the knowledge.
Yeah, sorry I spent the whole time talking.
No, hey, we got to learn a lot, So and we might bring you again a few months down the road to kind of catch up, some updates, whatever else do you want to share with us for sure.
Yeah, happy to always jump on for the most part. I mean, I can't be there every month, but let me know if you guys want me to come back and talk again. Always happy to just. I mean, this is by the way, guys. This is why I think we have the best job in the world for anybody out here. If you don't think we have the best job in the world, then I don't think you're lying, because this is our job, is to talk to people about real estate all day long. So I think we have the best job in the world. So, I mean, I can't believe people actually pay me to do this.
Yeah, I second that. Yeah. So Jared, your next session is
it will be should be October 26th.
26th. Yeah, I'm looking at the calendar. 26th, and then following week is Cynthia Lee planning for 2023, the business session that you mentioned to us. I see.
Mm-hmm.
Yeah.
Yep.
Yeah. Awesome, Jared. Thanks again, man. Awesome session. I appreciate it.
All right. Well, thanks, guys. Hopefully everybody has a good day.
Thank you, Jared.
All right. Thanks, everybody.
Thanks, everybody. And this session was recorded, or is recorded, and I'm going to share the recording later through Kim, so you can watch the whole session. That was truly amazing session, so don't miss out. Thanks, everybody.
All right.
Thank you, Meny.
Thank you, Jared.